when you get your credit report started up, it gets reported to the bureaus. The main purpose is they collect data about all of your information, all of your transactions, all of your credit limits, all the money owed, any information about you, any places you moved, your addresses, your contact information, on-time payments versus late payments. It keeps track of all of that stuff. So the reason you don't want to play around with that is because it has all of that dense data about if you're a good borrower or not. So when you get into credit, and I know I just talked about the newbies, but I mean, even the vets in the game, as far as, you know, adults that have had credit for a long time, people still get caught up in not doing what it's supposed to do regarding their credit, which that's results in you having a bad credit score at the end of the day, which a lot of us don't want to have. The whole point in this class today is to talk about things we should be doing to get us a 700 credit score or better in the long, you know, in due time. It's not going to happen immediately. You got to put that work in over time to build your score up. I don't know about any scams. I don't know about all the hacks, as far as like, and hacks are good things, but the scammers are scamming. So I don't know anything about that. But as far as what you can control, I want you to focus on the fact that these bureaus, they got your info. So don't go tripping and trying to think you can, you know, do things or do shortcuts or, I don't know, cut corners. Don't even try it. All right. So the information that the credit bureaus take specifically here, they calculate your credit scores. I just mentioned that. They make it's used to make lending decisions, such as whether to offer you a credit card or a loan at a particular interest rate. In some pre-employment situations, they do background checks, and your credit worthiness is a factor in if you get employed or hired or not. And also, it's used to decide whether you may have to pay a deposit or not for utilities. And a lot of times when the new iPhone comes out, it's used as well to determine if you have to pay a deposit for that as well. So good credit, and we're going to talk about the benefits of having a high credit score here shortly, but those are the type of things that your credit report can determine, depending on if it's good or if it's bad. So be careful and be intentional about maintaining good credit. So we're going to get into some credit report review items next, but I just want to remind you, your credit score is established and determined from the items that are on your credit report. So it is very important that you keep that thing clean, you keep it like smooth sailing and just responsible when you're using credit. All right, so when it comes to your credit report, these are the type of things that you need to look for when you're reviewing it. You get a free credit report on an annual basis. And in the next slide, you can get your phone out if you're looking on your computer, or screenshot it, or just go to the website. I'll tell you the website once we get there, but you're able to get a free credit report on an annual basis for you to be able to review, to make sure that your identity hasn't been taken or stolen and people are opening false accounts in your name. Make sure you don't have any delinquent errors on your account that maybe you need to dispute. Making sure you are in tune with any late payments on 30 days, 60 days, 90 days, 120 days, like those type of dings on your credit report can make your credit score go down. And it goes down easier and quicker than it does going back up. So be very mindful of that. So you want to be checking for identity errors. Identity errors are things where you want to look for verification of your contact info, such as your address, your phone numbers, and your name. Accounts with names that are similar to yours or the same as yours. I have a very unique name, so if somebody is trying to use my name, they got really, really creative. But the last thing is incorrect accounts added from identity theft, like I just said a second ago. The next thing is incorrect reporting of account status. So in this case, you want to make sure closed accounts are reported correctly. You don't want to have a closed account that's reported as open. You want to make sure you are reported as the owner of the right accounts. And when you are actually just an authorized user, you don't want to be an owner on an account that you're an authorized user for, or vice versa. You want to make sure you're checking for accounts that are incorrectly reported as late or delinquent. Just mentioned that a second ago. So if you got something that says I was late or I was delinquent, but you have the documentation, whenever you're talking to these people, your credit card companies, about any agreements or any settlements or any of that stuff, you want to have it in writing. So you have that proof if you have to dispute any of these issues. So making sure that things aren't incorrectly reported as late or delinquent is a big deal, because your payment history is the top factor regarding the your credit score, or the number that you have for your credit score. The incorrect date of your last payments, date open, or date of a first delinquency. And then lastly, you want to make sure the same debt, you want to check for the same debt is listed more than once. If the same debt is listed more than once, then you have double accounts. And if that account is bad, it's a double whammy. So you want to make sure you're checking for that as well. And then lastly, data management account errors. So this is when they are incorrectly listing your balances and incorrectly mentioning your credit limits. If you have a credit limit that is supposed to be $5,000, but they have it at $3,000, and you spent $3,000 on that balance, you have a balance of $3,000, then that's an indication that you've maxed that card out. But if that's incorrect, and our card has a limit of $5,000, but our credit report has an incorrect limit of $3,000, we can get that fixed. Then it helps us with our credit utilization ratio, which we'll talk about a second here as well. So this next slide is I'll leave this up right here while I chat with you guys right quick. So this is a barcode that you can scan to take you over to the free credit report that you can get. And this one in particular is from Experian. This one is in particular is from Experian, where you can get your free credit report from them. So I really want you guys to take, this thing serious. Credit is one of the most important things that we have out there. Cash and credit, they work hand in hand. I really like to help people become better cash managers first, and then we start talking about credit. If you can't manage your cash, how can you make sure you have enough money in your accounts to make sure you're paying off your credit and establishing great relationships there? So yeah, credit scores. Everybody knows, or I'm assuming everybody has heard of, your credit score and how important it is and stuff like that. So the credit scores, they range from 300 to 850. The score is developed from the information that comes from your credit reports, as I stated just a few moments ago. So be careful with your credit report. And I keep saying that over and over again in doing this webinar, this class, this presentation. But yes, don't play around, because it's going to get noted. So I'm just going to go over the credit score ranges right quick of what's poor, fair, good, and very good and excellent. So below 580, that is poor, that is bad. You're going to have high interest rates. You're going to get denied for loans. You're going to get denied for credit cards and cars, and it'll be tough for you to get a home. Sometimes it'll be tough for you to get an apartment. You have a large deposit that's due to you before you even get access to some of those things. 580 to 669 is considered fair. 670 to 739 is considered good. 740 to 799 is very good. Then excellent is 800 and above. Now, you can get a certain score, but don't get so stuck on it, because it does fluctuate every now and then. And if you're doing things right, it's only fluctuating a few points here and there. But if you're losing 100 points and stuff like that, that's when you know you've got off track regarding your credit management. So those are the ranges that list out the certain type of status of your credit. Those are the ranges. And the main scoring model that I'm getting these ranges from is FICO. So FICO and Vantage Score are the two credit scores that you will see on a regular basis. Those are the two that I would say mean something. And FICO is the OG. FICO is the one that has been around, and then Vantage Score came around as a competitor of sorts. But FICO is the one that most people know about and most people hear about. when you apply for loans and stuff like that. And then there are multiple scoring models for both of these, but FICO 8 is the one that you will see the most. The other ones go into like auto loans. That's another FICO number. Car loan, I said auto. Home loans, that's another number. Every type of thing has a particular FICO model that some of them use. So yeah, FICO is the main scoring model that we got those scoring ranges from, if you're going back to reference that for any reason. Next, I want to talk about high score benefits. So I'm just going to hit these right quick. When you have a high score, when you have a score that is 700 plus, you in a game, baby. Like, that's where you want to be. You want to have, and let me go back here. Let's see. It says a good credit score. So 670 and above. We'll rock out like that. 670 and above, you're in a good spot. You have lower interest rates. You have higher credit limits that are offered to you. Like, sometimes you don't even have to go and ask for a higher credit limit. It's offered to you like, hey, do you need more credit? Like, do you need to increase your credit limit? A lot of times they'll ask you to update your income, and that'll have a factor. And if you get an additional credit limit added to your account, stuff like that. But lower security deposits or zero security deposits, depending on what you're dealing with. So you're talking about utilities, talking about getting a new phone a lot of people finance their phones, talking about those types of things. You can have a zero deposit or a very low one. And insurance rates, I think it's auto and home. And those are the two main ones that are impacted by if you have a high credit score or low credit score. And then you get the opportunity to have access to more cars, cooler cars with more rewards, better rewards, cash back, higher percentage back on your purchases, air miles, sky miles, like all types of stuff. When you have bad credit, you don't have access to those types of things. If you're on YouTube, if you are on Facebook, like this video, share it. If you're on YouTube and you're not subscribed yet, please subscribe, like, and hit the notification bell so you can stay in tune with all the videos that we're going to have coming out. I know this stuff isn't for everybody. Everybody's not trying to improve or have a desire to improve their financial situation. But my goal is to give you the information and the knowledge so that you're not ignorant around these topics. And then after that, you're just going to have the decision to make. When you get done listening to me and talking to me, all is left is decide if I want better for myself or not at the current time or ever. So I'll leave it at that. Y'all have a good rest of your day. See y'all on the next one.